Let's get in Mr. Vidyashankar Krishnan, the Chairman and Managing Director at Forgings. Hi, Mr. Krishnan. Good morning and thanks a lot for joining in. Well, for this quarter, the top line is more or less flattish, if you look at it on a year-on-year basis. But earlier when you joined us, you had given us some ambitious guidance for FY25. And I'll tell you what, sir, most of the street is saying whatever the management guides for, they should try to achieve it. So let's try to revise that guidance that you gave us earlier. You were talking about 1,800 crores of revenues with margins at around 20% and also volumes at around 90 to around 95,000 tons. Any change in any of these numbers?
Morning, Nigel. So last time when we met to now, macroeconomic situations have considerably taken a turn for the, what shall I say, worse or a little bit tempered. So we are looking at marginal growth this year in the region of around 5%. So from around 1585, which we did last year, we would expect about 1650 plus this year.
Oh, all right. So that's
tons from around 85%, 85,000 tons, 84,000 tons to about 87 to 90,000 tons.
All right. So that's a skimming down of you're lowering your guidance because demand conditions have changed. We got that on the top line. Since you won't get the benefit of operating leverage that will play out, then could you tell us what impact will have on margins? Margins can hold around 20%, or is there a downside risk to that as well?
Due to cost reduction efforts that we are taking across the board, I would say that margins will hold at the 20% mark. We stand by our commitment to look at margins comfortably in the region of 20% from Q3, that is by end of this calendar year and onwards. So Q3 and Q4 onwards, margins should be up. Even for this quarter, if you look at it, the consolidated margins stand at 19.4% after removing other income, as against 17.7% in the previous quarter, in the corresponding quarter of the previous year. So there's been a substantial improvement in margins due to considerable cost compression across the board. That will continue, and margins should hover around the 20% mark that we had guided a few quarters back.
Okay, all right, 20% margin, that's good. 5% revenue growth, 20% margins. Mr. Krishnan, hi, good morning. Prashant here. On the high tonnage press line, right, there was a lot of, there is a lot of expectation that this is the segment which will lead to, which will be the margin driver and which should contribute in a significant way. I think, could you give us a sense of how this is looking? What the outlook here is?
Yeah, sure. Largely, the high tonnage press line serves the CV market, which right now is quite range bound. And we hope that along with our CV OEs, that that H2 will be much stronger. Now, what we've also done on the high tonnage line is to add a 16,500 ton press, the largest of its kind in the world. So this press will come into production in the next 12 to 15 months and into commercial production in the next 12 to 15 months and is expected to bolster our capacity by around 25,000 tons per annum.
You know, I'm reading a note which essentially said that you can achieve a top line of between 1,800 to 2,000 crores in the next 2 to 3 years here in this segment. Is that a fair assumption?
I wouldn't say not in this segment alone. Overall, we are looking at, of course, much bigger numbers over a 2 to 3 year time frame. This segment would be around 50%, so about 1,500 crores approximately over the next 3 to 5 year time frame.
All right, Mr. Krishnan, final question before we let you go then. Do you see any downside risk to these numbers that you're giving us? You've already scaled it down, but do you see that? Point number one. And point number two is on the EV revenues for this year, what are you forecasting?
This year, we will make our initial debut on the EV. Let me first look at the guidance numbers first. So we expect these numbers to be, whatever we have discussed now, to be reasonably held right through the year. Of course, we have to always remember that we are not a market maker. We are what shall I say, followers of OEs and the market itself. So subject to reasonable macroeconomic conditions as we see them today, I would say that these numbers should hold. Next, on the EV play, we are moving ahead. This year we will clock our initial sales, and next year we will hit double digits.
All right, 100 crores this year, 25?
Sorry?
100
Sorry?
crores this year in FY25, EV?
No. Double digit next year. So this year we will open our account.
Okay. All right, fair enough. So we leave it there. Thank you very much, Mr. Krishnan. Appreciate you joining in with that. Well,